Hello, I'm Paul Marriage from Tellworth Investments and welcome to the August 2022 monthly video update for the HI European Market Neutral Fund. This was a solid month for the fund, delivering good capital protection in challenging market conditions. We moved the fund to more of a UK model during the mid-month, and I think this has also helped us. So if we look at what's worked for us and what hasn't worked for us, probably the biggest challenge in terms of long stocks was Marshalls. Marshalls is a UK building materials stock, and it warned a little bit on consumer demand. It makes things like driveways and patios that go into consumer renovation, as well as lots of other things into infrastructure and towns and that kind of thing. But there's a little bit of weakness there, reflecting generally a pretty tough environment for the UK consumer. So if you look at the things that work better for us, like an SSP or a Next short, you can see how in the mix, we are still quite short UK consumer. That's worked pretty well for us. Marshalls probably stands out as the one thing that didn't work there. A big win for us was OSB. We've talked about OSB a lot. This is a challenger bank in the UK. With UK rising rates, challenger banks should be pretty well placed really to drive their net interest margin. And at the moment, loan repayment, bad debt seem pretty good. So it's a stock that's been left behind a bit by the stock market and played a bit of catch up this month on good results. So that's really good to see. We think the banking sector generally is reasonably robust in the UK. We're less sanguine about the housing sector, where we think there's a bit of risk to the downside on UK house prices and UK land prices. So that's quite a good balance for an OSB for us on the short book as well. We would expect other consumer stocks to be weak. So something like a Watch to Switzerland on the long book, pretty challenging. Future Publishing, which has a kind of retail, but also pretty challenging. But overall, keeping that growth quite low at around 100 and keeping the book very balanced was actually a reasonable result for us in terms of how we delivered the returns on the month. Look, life isn't suddenly going to get a whole lot easier. We know that, you know that. And so it is all about balance. And we've got to be very mindful of some of the big input factors. But equally, we know there's a lot of value in the UK, and the stock market has already consumed an awful lot of bad news. So we need to be mindful of that change in sentiment. We've had changes in sentiment before. You'll recall the change in sentiment around COVID in November 22. And, as people get perhaps more used to the gas price situation and perhaps, it's conceivable there could be some sort of improvement in the Ukraine situation, we could get a fast sentiment change, and we need to be on top of that. It'd be very easy just to get into a bearish rut, be short everything, make a small amount of money, then be caught out. So very conscious of that, keeping that balance, which is what this strategy is all about, and balancing both stock specific and factor risk to deliver positive returns. Thank you again for your support this month, and we look forward to updating you as we enter the final quarter of the year.